Welcome to the Spectrem Monthly Confidence Index webinar. I am Kent McDill, Senior Writer at Spectrem, and I'm joined by Senior Consultant Kathy Dordick. I'll be presenting information about Spectrem's Confidence Index from August, and Kathy will share with you key points from our report titled The Convergence of Health and Wealth. The Spectrem Confidence Indices from August were perhaps the most compelling of the year to date. Investors spent the bulk of the summer balancing their enthusiasm for the stock market and American economy with concerns over tariffs and global trade wars. As a result, the index was very consistent throughout the summer. But in August, investors decided the stock market rally and economic numbers were for real and acted accordingly. The Spectrem Millionaire Investor Confidence Index improved 12 points to 20, the largest single-month increase in more than 4 years. It also marked the first time that the SMICI has been in double digits since March. It's the first time the SMICI has been to 20 since April of 2017. The last time the SMICI sat in single-digit territory for at least 4 months, as it just did up to August, was the 7-month stretch from February 2013 to August 2013, when investor confidence was tepid for almost an entire year. The improved confidence index in August is almost entirely created by enthusiasm among millionaires who reported an increased interest in stock investing, individual bond investing, and a drop in those not investing in August to the lowest level since February. Interest in stock investing rose among millionaires to 41.1% after registering as low as 27.9% at one point during the late spring. In corresponding fashion, cash investing among millionaires fell to 17.8%, a drop of more than 10% from the previous month, an indication that investors were taking funds out of cash products and putting them into stocks. The overall household outlook increased 5 points to 27.9, and the outlook for the economy rose from 8.4 to 23.2, the highest mark since January, when the new tax laws went into effect and had a positive impact upon household outlook. The last time the Spectrem household outlook was this high was in March, which itself marked the tail end of a 6-month span of optimism among American investors. Since then, the outlook has hovered between 23 and 26, but bottomed out at 22.7 in July, which was the lowest ranking since June of 2017. In a bit of a shocking turn of events, the confidence index, the outlook increase in August was almost entirely caused by an increased interest among investors who profess to be either Democratic or independent voters. Republicans, on the other hand, backed off in August. Each month, Spectrem asks investors one question related to current topics from the world of politics, government, and societal matters. In August, investors were asked, what is the story in the news that most affects your economic outlook? And for the second time in a row, international problems was the number one choice of investors. Each question is asked once every 3 months. Back in May, international problems was the number one choice for 34% of investors, and for August, that percentage dropped to 31%. But that choice still outpolled the number 2 selection, which was political environment, which earned 25% of the nods and increased its percentage from 21% in May of 2018. That shows that 50% of the investors either were affected by international news or political news, which gives you an idea of what's going on for investors in America today. I'll now turn this over to Kathy Dordick.
Thank you, Kent. What I'll be discussing is our most recent report, The Convergence of Health and Wealth. That is a study where we looked at healthcare financial preparation for potential future health concerns and investor preference regarding healthcare and living situations as they age. This report was fielded in May and June with individuals that are over 50 years old, and they have a net worth, not including their primary residence, between $1 million and $25 million. We also conducted focus groups to gather some more qualitative information about this important topic as well. One of the things we looked at was the level of concern on a scale from 0 to 100 about various issues that individuals face in retirement. Not retired investors' highest level of concern was regarding a healthcare event, when retired investors are most concerned about the health of their spouse. Non-retired investors identify that they expect medical costs will be the highest expense they're going to face in retirement, whereas retired investors rank it essentially tied with taxes. However, as wealth increases, that significance of taxes increases as well. Looking at basic preparation that investors have done with the expectation of end-of-life care and things like that, less than half of non-retired investors have a financial power of attorney, exposing a potentially large risk in the event that they're no longer able to make financial decisions on their own. Over a quarter of retired investors, however, own long-term care insurance. Educators are this occupational segment that has the highest level of annuity and pension ownership, which is unsurprising given that educators often have 403(b) plans. When looking at future healthcare and living arrangements, we also asked investors to look at who they would look to for information with determining what the plan would be. Not surprisingly, as wealth goes up, so does the inclination to use their advisor as a resource. Not wanting to be a burden is the largest motivator to purchasing long-term care insurance policies for both non-retired and retired investors. Lower levels of wealth investors have a greater concern of not wanting to be that burden, while higher wealth levels are more likely to have purchased their long-term care insurance policies because they simply view it as affordable. As a final reminder, we also have our monthly High Net Worth Insights newsletter, where we provide advisors and providers with how their clients are reacting to the markets, investment intentions, and any relevant top-of-mind issues that advisors should be discussing with their clients. As always, thank you very much for signing in.